Hi everybody, hope everyone had a great summer. We're not done yet. We're still having some decent weather. Nights are getting cooler, and you know how that goes. So enjoy it while you can. Bank of Canada raised interest rates for the fifth time this year. So what does that mean going forward? Well, of course, the Bank of Canada raised interest rate 0.75% to bring the overnight lending rate to 3.25%. So that is, of course, to rein in inflation to their target rate. Um, but is the Bank of Canada done yet? That's the question. So I had posted a video earlier this year before the market started to change and whatnot, and I had a meeting with CIBC's senior economist Benjamin Tall, and of course the insider information was that the Bank of Canada wants to raise rates to 3.5. So we're not 3.25. So probably expect a 0.25% interest rate hike in October or sometime kind of in the end of the year. And then they may hold off there until through the winter, and then in the spring. A lot of folks in the industry are expecting rates to drop. And there's a couple of different reasons for that. So, if you have high interest rates going on right now for we're roughly about 3 months in on these rate hikes. You bring it into end of the winter into the spring. That's about 6 months. They're hoping to bring inflation down at that point. Like they're hoping the data shows that inflation has gone down. Some of the data has shown that inflation has gone down, but if you follow me, I'm very critical on the CPI. I call it the CPI, and it's an inflated numbers because they don't use the same baskets of goods all the time, and that variable keeps changing. So long story short, will interest rates come down? Yes, they will eventually come down. In the short term, probably not. In the spring, they probably will come down in the spring because there's always a spring sale for mortgages to get folks into mortgages into the spring and stimulate some new business for the banks there. So that's my kind of short-term forecast. But let me show you a little bit of stats here, or I'll just kind of read it off here. So year on year, sales are down 34%. New listings, we're pretty much on par, as well as average price. We're pretty much on par from last year. So that's showing us, the data showing us that the market has now come to a balance, which is actually good. That's where you want to be. You don't want to have the seller's market like it was crazy, where everyone's bidding and losing out on homes. But we haven't swung down to the buyer's market, which a lot of the media kind of tends to indicate that we are in a buyer's market, but the data shows that we're not. For me being in the field, I don't feel like we are in a full buyer's market right now, because in the medium price bracket, so anything kind of 600,000 and below, we're still seeing bidding wars. Not widespread, but for a majority of properties. And even if you're in kind of the median price range, like a little bit higher, something sub 900, from like 6 to 900, some properties still do get bidding wars, but it's property specific. Maybe they've artificially underpriced it, and things like that. So let me just read a little bit here from Royal LePage, our competitors, but they also have very good data as well. So the president and CEO says, we have significantly reduced our outlook for 2020. However, home prices are still forecast to end the year higher than 2021 and well above pre-pandemic norms. So Royal LePage doesn't feel like the market's going to be super hot anymore. I agree with him on that. I don't feel it's going to be super hot going forward. But with Canada's economy, for the general sense, we are fairly stable. So prices always still go up. They still talk about that supply and demand issue. How much of that is actually a lack of supply? It's kind of that's still under debate and whatnot too, because there's a lot of supply in right now, but there nothing's selling. So if it was a supply thing, things would still be selling. It's more of an affordability issue. So Royal LePage has downgraded their price appreciation forecast for the end of this year. REMAX has kind of done the same thing as well. We're all really waiting to get through the winter because we know we all hunker down. Prices will probably come down a little bit more especially through the wintertime, because this just statistically happens. In the wintertime, it's always a good time to buy a home. January 5th is statistically the cheapest time to buy a home, like historically. So you always see a lull in the wintertime, and then things start to pick up in the spring, and that's where we'll really have an indicator to see what does the Bank of Canada do. Do they keep interest rates the same? Do they lower interest rates? Are prices going to still be balanced? Or are they going to start to trend up? Because with the increase in the interest rates, prices were still up from the last year, right? They're not up 20% month on month, which is not normal, but bringing the market back to a balance with this latest interest rate increase, that's where you want to be. So hopefully it kind of stays that way. And then in the spring, we still have a balanced market and everybody gets a chance to get a good price on buying and get a good price on selling. So that's my quick outlook for the next few months, and just sort of recap on what has happened with the interest rates hikes. If you do have any questions, please reply back to this email, or reply down in the comment section of this video where it will be posted. I hope you folks have a great rest of the year. Talk to you soon.